Last week, we took your viewer questions. We said the word and one of us also said the word often. We discussed it, some of you. Others said, best show ever. To both camps, we say, we're doing it again. Returning the man whose biceps have their own housing zone, Andrew Malcolm, and the man whose shirt is now code compliant with the Auckland Unitary Plan, professional property investor, Dave Whitburn. Coming up, your furious, genius, and occasionally unhinged feedback from granny flat traps to zoning law chaos, and yes, Satan makes an appearance too.
Financial freedom faster. Financial freedom faster.
I hope Satan doesn't like us.
It's Satan. We have to, that's our duty to renounce evil and to fight Satan.
Before we start, check out MortgageHQ's latest release, The Mortgage Snapshot. It's a ridiculously useful calendar for figuring out your options in this market. Refix, restructure, or just reality check. It's all there. Links in the description below. Did we drop too many F-bombs last week?
Yes, I don't think there's need for swearing in a podcast.
We're all f***ing adults.
Did you drop an F-bomb before we did the podcast? Yes, you did.
I don't recall that.
Here's
I try not to do that, but yes, I'm imperfect, yeah.
Here's the thing, right? It's what adults say.
Yeah.
That I don't know any adult who doesn't say that word. In 1996, when I started broadcasting, I didn't say bloody on air for 30 years, but it has become such a normal part of vernacular. Why do people get offended by it?
Well, it's people that are out of touch with what the real world is tradies and getting shit done. And if you're sitting in your little home office, or you're not working, or you're sitting in this ivory tower, you don't realize what the real world is.
But that's our target market, is the real world. And so this is why I was surprised that we had so many people say it. Now, I'll take it a step further. Last month, the most powerful man in the world got onto Air Force One and he said, and I quote, in fact, we'll play the video, what he said.
You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the fuck they're doing. Do you understand that?
Now, that was fascinating for me because Trump is all about fake news and censoring the news. And it was News Talk ZB and pretty much every media outlet beeped the word f***. That was legitimate news by the most powerful man in the world while there was potentially a war in the Middle East. Why are we censoring that? Are we not adults that we can't hear that word and not get offended?
Well, I mean, kids don't watch the news anyway, so it's all, the news is basically for adults.
You've been getting more hits than 3 News lately, so, you know.
What a surprise, 3 News is dead. I know, can we just touch on that though? Why are we beeping the most powerful man in the world saying something and using that word when everyone knows what that word is?
It goes back to our country's Christian roots. You could also say other religious roots. It's not a good thing in Islam.
Stop you right there. About 14% of this country is Christian. The rest of us aren't.
I think in that last census, 2023, it was about 31%.
Christian. Okay, I take it back. 31%.
31% of the census. So let's say good Christians do the census, and we're evening it out for all the people that don't do the census.
Okay, so 100
This is not widely practiced, but there are some groups like meaning the Orthodox Church, our Eastern European friends, they perhaps don't practice.
Okay, they're not watching this program. 100 minus 31 is what? 69. If a government won...
That's your favourite number, isn't it, Craig?
I'm taking the fifth. If a government got 69% of the vote,
yes,
that would be an absolute landslide. So by your own figures, you're saying 31% of people watching this are offended. So I think we should say fucking
not
worry about it.
Christian is offended either. Donald Trump is a Christian.
He's not. Come on. He's not Christian.
In terms of many of the values he lives by, that perhaps he's got a few work-ons. But hey, we're all sinners, Craig.
Sean Biddle 2023 writes, any prayer that is not to God is to Satan. I don't follow Satan, I follow Jesus.
Sure.
And I will not allow anyone to pray from any false religion to enter my property, let alone charge me money for it.
Yeah, it's fair enough. And that's certainly one to.
That's not fair enough.
Well, no,
It's not fair enough.
no. Sean's comment is fair enough because it's his personal feeling, and we're not in charge of other people's emotions or thoughts because God is here.
Does Sean honestly think that a prayer not forwarded to God gets forwarded straight to Satan? And Satan goes, whoa, someone thanked the universe for my coffee. Start the fire, boys.
It's not really how we were trained, right? Greg, the prayer is your own personal conversation with God, and we have another number of also viewers as well. They would pray to Allah as well, perhaps to the Salat as their routine as well. And it's certainly not a prayer to Satan as well. But Satan's not really terribly involved in prayers. Prayers are something that Satan does.
Sean needs to chill out. Go and watch another channel. Jeff 9190 writes, with the Watercare ban on new resource consent in some areas of Auckland, can we build a granny flat and plumb it into the existing house?
Yes, because we have a really interesting question that's been asked, but we're going to be teaming into the same lines. We're not going to be having a separate connection in most cases. So we would be able to get that sorted out through the PIM or Project Information Memorandum. We submit that to Auckland Council in this case to deal with Jeff's question, and they'd wouldn't be referring that to Watercare because you'd be teeing into the existing private connection. So it'd basically just be a Y junction off to the new dwelling that goes into the drain line.
All right, Giovanni P says, the problem is knowing the regulations. How many people know that a 3 meter by 3 meter double bedroom is not a double bedroom? 12 meter square is. If you have 2 adults in a 3 by 3 bedroom, it's overcrowding. If it's more than 50%, the ceiling height is less than 2.4 meters high, the habitable room is non-compliant. When is a home and not a temporary shelter?
That's not quite correct in terms of that 2.4 meter height. That challenge that on the question in terms of what makes habitable. I'm aware of buildings that have been passed and given code compliance certificate from Auckland Council recently that is as low as 1.9 meters in height. It's just you've got to be mindful in terms of the means of escape from fire, which is the building code clauses, starting with the C prefix. That's where we've got to be a little bit mindful of that there. Good question of what makes a home, but to me, what makes a home, that you want to have potable water. So therefore you can drink there, you want to be able to have a toilet without having to go for a walk to use the neighbours, and you want a cooking facility, right?
Well, yeah, and this is where it comes back to whether you're looking at cabins, whether you're looking at additions, or whether you're looking at separate dwellings, and it all depends on the site and what professionals you're using, or if you're trying to do it yourself, you have to understand the rules.
Brad Gold says, great yarn, gentlemen. We have used MortgageHQ. Excellent service, and I have personally met Dave Whitburn. Very knowledgeable and low-key wealthy man.
Thanks, Brad. Good to see you, and hadn't seen you for a while. Hope all's going well in the construction world that you're in, and keep smashing it.
Let's have a look at the Reserve Bank letting New Zealand's recession drag on. We had Mike Taylor on. Let's start with you, Andrew. This is from Brett. He says the Reserve Bank is about at neutral. You don't want to lower interest rates, encouraging more debt. New Zealand's private debt is already ridiculous, and taking away from savers decreases spending. New Zealand needs the government to start spending, and a lot. People need to stop blaming the central bank and blame the government. Be careful listening to investors' narratives.
Yeah, when the Reserve Bank has to control inflation, and we've been looking to them to stimulate the economy, they can do that, but their first remit is to control inflation. So what their country wants is the economy to be strong. What the Reserve Bank is trying to do is stay in this inflation band. So the government really does have to look at other ways to stimulate the economy. And it also falls back onto business owners and investors to figure out ways to get things moving. And we really are reliant on businesses and business owners that hire people that invest, because without confidence of those business owners to take action, shit doesn't happen.
That's a really good point there as well. I thought Mike Taylor's interview was yet another excellent interview on MortgageHQ there. This place has really become a centre of excellence in broad financial service and education there. But what I thought was great is that we have to be mindful of the Reserve Bank there as well. They're only charges to keep it in that 1 to 3% band, the inflation, not to encourage lots and lots of employment and to change migration policy and tax policy and things like that. Potentially, they went a little bit far the last time. They were well-intentioned. They didn't know how to deal with COVID. Quite clearly, the results haven't been great for all that expenditure that we've done and having to recategorize the debt to remove some core crown entities as state-owned enterprises. So it looks like we've got lower government debt or core crown debt to GDP. We've been, perhaps the stats that we have put ourselves under pressure. To me, that's a philosophical question about how big do you want the government to be? What is the maximum size of government? What should the expenditure as a percentage of GDP be? And that's where some of the actual economic ideology comes through. Because do you want a big government, or do you want to encourage private enterprises, to encourage the hardworking farmers and business owners there to succeed? Because if you take a bigger share and tax them more, can that start to erode what they want to do? Does that start to leave them dry motivation? Is that why we have over 30,000 New Zealanders leaving to go to Australia each and every year?
If we want to speed things up and get the economy confidence kind of light a fire under it, then decisions around how much to tax people need to be looked at closer. And if you want people to spend money faster and more often, you have to tax them less. Or you have to give them a reason to spend money faster, get their velocity of money cranked up. It's a very sensitive subject, because if you start taxing people less, then you have less money to spend, the government. And
social programs and things, and that causes.
We did actually have a question about Rogernomics, and they said it was a long tail, and I didn't include it, but I think Rogernomics, for the most part, got it right. He wanted GST at 25% and no income tax.
Yeah.
And that's when David Longy stopped and said, we need a cup of tea.
If you take the late, great Sir Bob Jones's kind of idea around taxes, all tax is theft.
Yeah.
And you're stealing from people that are earning money, and you're saying, we'll spend it on behalf of everyone. The thing that taxpayers are the ones that actually pay a positive amount of tax, not the people that pay tax and they get benefits back. Yeah. The people that pay a lot of tax, they just want the money spent well. What needs to happen is more accountability for money, the tax that is collected, to be spent well. So a longer time where government's in power to actually have impact is probably better. And then to centralize things like infrastructure spending, kind of depoliticize as many things as we can that we would all agree on, so that it becomes less of a political football, and funding doesn't go up and down for things like health and jails and things like that, because we could all kind of agree. And then the other philosophical thing is to say, okay, the haves versus the have-nots, people that are wealthy, do you accept that eventually that divide is going to get so big that there's going to be a form of revolution, and that money's going to get taken off you forcefully or through politics? Is it better for people that are wealthy to accept that that's going to happen eventually, and to volunteer that money across early in a controlled way, rather than having it taken away from them?
Because we've seen that as times around the fall of the Roman Empire. We've seen other emperors do the revolutions, the French Revolution as well, even things like the Bolshevik Revolution in the Romanov Tsarist dynasty as well.
And if it's done poorly and politically, then you just get a flight of money. So the rich people leave.
Yeah, so the point I would like to make is my father worked for a multimillionaire in the 80s. And he said to me, and I was quite young at the time, he said, with GST, at least he paid tax, whereas he wasn't paying any tax beforehand. And I think that that's the one bugbear of the lower class, that there are so many rich people who don't pay tax. 25% on GST forces them to pay tax, and they spend more.
It's a consumption.
That's right.
The GST Act is very, very thin, whereas the income tax is
pretty
I think this perception that people are paying tax, everyone's paying tax on their income. There's only so much you can do to hide or create efficiencies in your income tax, and you can defer it, but not forever. So people are paying tax on their income. What people don't pay tax on is their asset base, their wealth base, where things can just sit idle.
Exactly. They can also be owned overseas. The only issue might be in transfer pricing in terms of overseas, the transactions consulting, and do you need depreciable and tangible property that's in the Cayman Islands or some other tax haven, and pay for a right to use the trademark, and those kind of things that can be tough. And that's where some of the multinationals rightly come under some criticism for quite aggressive tax planning strategies and policies.
New Zealand's real estate hotspots revealed. This was Mike Jones from BNZ. The region's quietly booming while Auckland stalls. We sort of touched on this last week, but Andrew again, Tom Jones, not the Welsh icon.
Tom Jones 04.
John Jones 04. That's right. He says, why would you have a guest speaker on that is continually wrong with his predictions? It actually devalues your channels when you have a clown economist on it.
Economists are there to analyze the data, right? And they make predictions or projections based on that data. But the economists are first to admit that they often don't know what's going to happen, and they're constantly readjusting their predictions.
They're put on the spot. They're asked to do crystal ball gazing. In the wonderful world of macroeconomics, lots of things can happen. It can be a fast, dynamic environment there, and it's pretty exciting. It's a really interesting role that they've got. And sometimes they've got to do it and make a call on it that, yeah, they've probably got a little bit of a bias only because they've got such large asset bases backed by residential investment property. That's what underpins the banks in New Zealand and their financial performance. So they're not going to be going, oh, the market's going to fall 10% next year, anything like that. We don't think it's going to do that. It's ridiculous. But yeah, we take the point that some of these economists talk about, not just Mike Jones, have said the market will move 5 to 9% over the next 12 months as their forecast at the start of the year. It's not looking terribly good. And we take the point that last year is going to move up another 5 to 7%. Yeah, it didn't happen. So we understand where you're getting at, but they're just trying to take an educated guess. And it's better than others there. They do have a lot of data, and we do have to respect them. And isn't it great that we can bring you such a wide variety of people onto this channel as well that have difference in opinions there. And it's really important to have one of the big four banks to have their chief economists along.
Carl C. Strand, 7876, writes, I am talking about the fact that all indicators and fundamentals show the market is in trouble and there is almost certainly more falls in seeing prices to come. This is obvious if we look at current conditions, but this channel seems interested in only trotting vested interest after vested interest to tell us about the market about to pick up, just like they were telling us last year and the year before. Well, we weren't, but I take your point. When is the other more realistic side going to be addressed on this channel?
I'm happy to say that a lot of people are struggling and that the market might not climb. It might be that 5 or 10 years before we get back to where we were previously, and that 10 years down the track, it might be that we've had a lot of dips in the meantime.
Or it might not.
Yeah, and if nobody knows what's going to happen, and there's a lot of things that aren't in New Zealand's control. We're impacted by what happens globally. There's plenty of businesses struggling. There's plenty of people out of work. They're obviously not buying properties, and a lot of the time, if they're not in work, they're getting into a position where they have to sell properties. As an investor, as somebody that's trying to grow financial freedom for himself and for other clients, the thing that no matter what is happening, what I would encourage is always to take action. And there's always people that are saying, oh, I'm waiting
till the market rises.
That's
my point, right?
I'm waiting until it crashes and then I'll buy a property.
And it's so dumb because
It's
the deals are there now, right?
The same people are waiting for year after year after year, and then you talk to them 5 years later after you spoke to them, they're still waiting. And so, is the market going up or down? No one knows. No one knows. Where's it going to be in 10 years' time? That's the bigger question. Because if you buy now, you get some debt, and you hold, the asset will go up in value. The debt will stay the same or decrease based on the cash flow and your contributions. What you're investing for is the difference of the value in 10, 20 years and holding that debt at bay. That's why we're investing in larger assets with leverage. If you're buying something without leverage, then you're just really banking on the cash flow. But we're doing leveraged investments. So yes, we're increasing our risk, but we're also opening up our opportunity for much bigger returns, and we're decoupling our risk from the value of money being eroded away by government,
inflation,
global things. And we're just playing this game. We're playing the game of assets go up in value over time, and we just manage that debt. And it's the oldest trick in the book. It's classic rich dad, poor dad. It's how all successful property investors have built their wealth. If you don't buy assets, you won't get the financial freedom.
Follow up from Baz W255. He says, you're talking about homes affordability. It's not a cattle market. Investors are a despicable breed.
Yeah, you're on the wrong channel if you think that. So many people actually can't buy their own home. They don't have the family or income situation to be able to stay in that same place for a long period of time.
Reported 26% of Kiwis have such bad credit ratings that they will not qualify for bank lending as well. 26, so a quarter of the country can't get homes with bad credit.
Most people have a net worth of like $5,000 to $10,000, if that. They're never going to buy property. Their relationship status is constantly changing. Their income situation is inconsistent. It might be on a benefit. The reality is a lot of people can't afford or never be in a life situation to own their own property.
And a number of successful people choose to rent as well, whether it be Shamagol Equab that you had on earlier, Simplicity Chief Economist, David Seymour has also proudly said he chooses to put his capital renting, but we also know a number of financial advisors making decent six-figure incomes that choose to rent because they don't want to have a 2%, they want someone else to have a 2% gross yielding property that's really nice.
Okay, you also look at my situation. I've got a family home for myself. Yes, split up with my partner, and I'm renting a property for her. Right, so I can't afford the two properties at the time. I've got other investments. I need a rental property. Now, an investor owns that property so that I can rent it.
Because you choose to deploy your capital in multiple businesses and properties.
Okay, Stonk Slayer says vendors of property this year have still not accepted the capitulation of lower house prices. Something tells me with the flood of spring listings and fewer buyers, vendors will have to get real or risk not selling their properties which they overpaid for. Forget about 2021 CV. 2017 CV is closer to fair value.
There's an argument there. However, the CVs are always a bit of a problem. They're not going up to see the property, see what renovation you've done, see the dilapidation that's happened to it, see flood damage that hasn't been stickered, for example. It's a computer model and they're doing their best, but they can be wildly out. However, when you pull enough data sets together, you can get a trend. And yeah, you're right that the 2021 CVs are a bit of an issue. However, there are some CVs that have been issued in 2025 that are dated on 30 June 2024, such as the largest territorial authority in New Zealand, which is Auckland Council, with about a third of the houses in it. And I don't think that we're back in 2017 in most cases. Yes, the market's tough. Unfortunately, the Wellington region is beautiful, but a lot of people are doing it really tough, and potentially Stonk Slayer may be from that region and feeling the pain. And no one likes having years of equity wiped out. No one wants to be in a time warp and have their house worth what it was worth 8 years ago. The reality is that's happening, but that's not fair to say. There are some places that are actually going really strongly. Queenstown, Watercare, Tauranga are examples there where the market's got a bit of confidence and things are going quite nicely. For those on the rental side, because we need cash flow as well as equity, Gisborne's going really strongly. It's gross undersupply.
If you take 2017 prices and you haven't seen much value change between then and now, adjusting for inflation, then obviously the prices have gone down.
They have. And it's the real versus nominal.
Okay, so Nick Tuffley was on Thursday, on Wednesday, OCR cuts but no party. Why investors should rethink their expectations for 2025. That was the topic that we did.
And there's no OCR cut anyway.
No, right. Okay, so Peter KK6RG says, lower interest rates increases inflation. The Ponzi scheme needs mass immigration to increase house prices. There's an election coming and property investors will be hit hard by a change of government.
And obviously, since when's the property market been a Ponzi scheme? How is it unsustainable to do it?
We don't have enough houses. That's the main truth. That's the main problem in New Zealand.
It depends on where we are. I'd argue in Wellington that we've got an oversupply of houses, which is why rents are going down and house prices are going down, right? Because assuming if demand were constant there, then we've got to realise what stocks on the market. Are people not, when they go overseas, they rent it out, leaving it vacant? So we've got to be really mindful about the economic laws of supply and demand, and it's patchy. I'm not convinced that there is a supply crisis. That's why we've got to break it down into regions. Just taking all of New Zealand as a whole, that's a dangerous thing to do. In Auckland, the supply is arguably also oversupplied. That's why we're seeing many new builds that we're selling at 750k sell at 570k.
If there's a change of government, it will hit property investors. They will increase taxes on property investors.
The interest deductibility.
Yeah, they might change interest deductibility again. They might add capital gains. And it really depends on how big of a swing, if there is a change of government, how big of the swing is. Do they control with a majority or not?
But conversely, it might also, a change of government may also help your tenants out. That may well be that there's a living wage or some significant adjustments to the to rate there, and then with more money, the landlords will put their rents up. There might be increased accommodation supplements and transfer payments, so that can actually shore up your cash flow as well. And historically, the property markets have gone really well under Labour. In fact, better under Labour in the last two governments than under National. It's a little known fact as well. So in terms of Labour Party hating property investors, that's not actually true. And property investors have actually done well under Labour, even if it's not the desired consequence. That's simply what happened. Look how much equity was created there after the Ardern Robertson government's expenditure in 2020, 21, 22. Some huge wealth was made there. Yes, too much. And we're unwinding that now.
ViewSonic Screen says rate rises are also in the mix. Interest rates can go down, however, it's taken by council rate hikes.
Yeah, I mean, council rate hikes, you're looking $2-4 grand a year, depending on the value of the property. It's not that huge compared to the cost of interest rates going up. If you've got leverage on a property in a meaningful way, interest rates are more impactful than the rates.
Absolutely. It's just that people will start to feel it with insurance going up as well. So when you're having key expenses, so interest is property investors' main expense, of course, but then you have rates and insurance and repairs and maintenance as the other big three expenses.
If you look at like the amount of weeks properties not tenanted each year, you look at the maintenance, the insurance, the rates, and just other little costs.
Healthy homes coming in, it's really expensive.
Then you look
Should have already done it, but
yeah, you should 15-20 grand per property if it's $1 million plus property in Auckland per. So you think, okay, it costs 15 grand a year to own a property in Auckland, whether it's tenanted or not, and you add the tenant, you subtract the rent, like you really are lucky to be getting 3 or 4%.
For a net yield, absolutely. So residential property has some challenges, which is great because we don't just do residential property here, we also do commercial property as well. But if you're having a net yield that's more like 3% there, yeah, it's not that good. If inflation is running at 2% on average over the sort of 20-year long run average rate, then what's your actual return above that? Well, it's not just on the cash flow that you're looking at on your equity. How, when you deploy your capital, how far is it going up? Yeah. So you're adding the cash flow and the capital gains.
If you want to make housing more affordable, you really need alternatives that investors shift away from housing into the alternatives. Example would be infrastructure investments. If Kiwis companies in New Zealand got into a really good infrastructure
bonds as well that could come into it.
And so if somebody would say, okay, I got $1 million, do I buy a property in Auckland and get 3%, or do I put into an infrastructure fund at 7, 8, 9%?
Yeah.
Then they would say, okay, actually, it makes more sense to do the infrastructure bond. Then there would be less demand on property, and the prices would stop increasing so quickly, and they become more affordable for new buyers. So the lack of alternatives in New Zealand is one of the reasons why housing affordability is out of control, is because businesses and investment options are so limited in New Zealand.
And that includes the stock market as well.
NZFC listing is really disappointing. Like Mike Taylor was talking about that. A lot of the big companies in the NZX have been poorly run or had poor results. People look at that and they say, oh, like, why would I risk my money in the NZX when I know what I'm going to get in property? It's the lack of strong alternatives. And the government can set up infrastructure bonds, and they can make an environment that allows for that. And 7, 8, 9% infrastructure bonds, that's totally reasonable. Even 10%.
Yeah, I've got a fund manager as a private client to do some of my high end mentoring with, and interesting. He's a fund manager in equities there, but they too are a bit worried about this. They're worried about the state of the New Zealand stock exchange. Companies that have delisted to go to the likes of the ASX, and they're getting far better returns with the diversified players. We don't, how deep are we in our AI, our semiconductor companies as well? We don't have those exposures. So we actually have to go abroad there to do it, because the backbone of our economy is still primary industries, agriculture, horticulture, aquaculture, and the like. So we've got to be really mindful that fortunately we've got some weak equity markets, and it'd be great to see them pumped up. And until we actually do that and truly try to support that, potentially slashing the company tax rate like Ireland did, we're not going to be making a meaningful difference there. That's never to ensure that we get people to look at other asset classes more. I'd love to see more people set up and grow businesses, not just medium businesses, but taking them to larger, small businesses to larger size.
So how do you reckon the poll has gone, which has been on the ticker during the show? How do you reckon the poll has gone? Do you reckon 69% of people are going to say we can say the F-bomb next week?
Yeah, I think so. But we'll see. I like living in a democracy, so let's see if it's there or not.
Great.
Great. F***ing they.